following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 22nd. Terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to dial on in. Right now is just fine, 877-927-6648. You can send me an email like John in Sarasota did just moments ago. And when you do send me an email, it's steve@tfnn.com. When you do, just simply put up in the heading, if you would, radio show or something like that. That'll make it easy. Inside the Tiger's Den, we welcome all pings, Vasily. Any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow traded up 29 points at 21,439. S&P up 6, about 0.25%. The NASDAQ is up about 0.3% or 19 points. Russell's up 0.5%, 7 points to the upside. Gold's up $5, 0.4%. Silver's up nearly 1%, 16 pennies. Light sweet crude up a little over 1% or 51 cents. And we'll start right there because John writes in and said, "Hi, Steve." Hi, John. What might I need to see with UCO, that would be going long the crude oil complex, before putting my foot in? Well, let's go answer that question as best we can. Let's start off by taking a look at light sweet crude. We'll use a couple of different tools. The first thing we'll start off is looking at the daily chart. And so, John, my information I'm going to provide to you is really going to be based on a daily signal, so that you could have perhaps a little bit longer term trade in it. But again, without knowing the time frame specifically that you're looking for, but I'll try to address multiple time frames here. So if we look at the daily chart, what we can see at this stage, here's one thing that we know. Price with regard to the August contract is trading below Stevie's red line, 44.19. You'd love to see price close above that versus test it and reject it, in essence, as it has since, we'll give you the exact date out here, really since it has since of May 31st out there. So closing above that would be one element that you would like to see. Prior to that, because you can see we've got an A to B equals CD to the downside. Now, you might say, what in the Sam heck are you talking about? What is this A to B equal? Let's just draw it in. We're going to go from one swing point to the next. So we're going to start out here, looks like on about April the 12th or something like that, your A point. You can see price makes a beeline down to about May the 5th. Right around there, and then goes ahead and changes directions, forms one of those nice little TD setup 9 counts out there. 70, let's see, where is that? There we go. Looks like on about May the 25th, 4th, May 24th, I think it is. And you can see we have measured here a 1-to-1 A to B equals CD to the downside. That gets you to about 41.71. Now, that's the price area. We're in that price area. If you were to see a bullish reversal signal, bullish reversal candle, do we have one now? No, we do not. We have an inside day. So there's nothing bullish about this candle. It's just a little bit of a bounce in there. If you were to get a bullish reversal signal, then you could consider dipping your toe in the water. what you'd really like to see so that you're not in muddy waters out there. And I don't know who was playing before we came on, and I know it wasn't Muddy Waters, but I got the blues now. But if we that's neither here nor there. What you'd like to see, John, trying to keep this here together, is you'd like to see price close above Stevie's red line out there. So you got a couple of different things. Do we have that signal now? No. Can price get below 41.71? Absolutely. There's no other pattern here that has shown up, but we love the A to B equals CD pattern. But we don't just trade it as is. We don't just trade it assuming that as soon as we get to that D point, we're going to fire away. Well, fire away at will. If you would like. I like that commercial, whose will. But you fire away at will if you'd like. I'd say it's not a good idea. You want some type of confirmation. That's why it's really important to know your P's and Q's, which would be your Japanese candlesticks out here. Because price could easily make its way to the 1.272 general area in the 38.87. So that's what you would want to see as we take a look at this chart. Let's go take a look at, and this way we can take a look at an intraday time period. We'll go take a look at some TAS market profiles for light sweet crude. This is Stevie's special synthetic contract, but it works better than the other ones. You can see that right now on a 60-minute basis, prices in essence has run into resistance, 43.13. That's the bottom of its profile out there. Even a bounce to 43.98 doesn't really get you out of the woods. The 240-minute chart, 4-hour chart, the daily chart, the weekly chart doesn't show anything. That's nice. Just spit all over the microphone. And I wasn't referring to you. This shows that price could easily bounce to 47 bucks, 47.45, 44.42, 45.82. Those levels out there would be nothing more than just a bit of a counter trend rally. Tomorrow, John, on top of everything that I shared with you, if you were to see light sweet crude close above 44.49, that would be a test and a rejection of a weekly swing point. So that's my thoughts on light sweet crude. Watch Stevie's red line out there.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So I put an extra quarter in the machine out there. Hopefully it keeps us on through the rest of the show. And I guess I dropped off just before the break, so I don't know what you didn't hear, but what I was chatting about, Chatty Cathy out there, what I was chatting about was the volatility index. And I mentioned what's interesting here, much kind of like the markets that are completely certain what they want to do at this point in time, we actually have the same type of signal, or we did earlier this morning, same type of signal coming from two different charts out here. Now, when we take a look at this chart here, you and I looked at this earlier in the week, I believe, and what we noticed here with regard to the spot volatility index, that's a blue line on the bottom of my screen, so it means it's trading out at 1042. We still have this rising bottoms pattern that's in play out there, and as long as that pattern stays in effect, it's not a good thing for bulls, meaning there should be some type of retracement or pullback. At this stage here, we're going with just some type of retracement out there. As prices down below the yellow line, that's the 50-day exponential moving average. One way to utilize the VIX is to utilize it as a gauge of liquidity. When the VIX, spot VIX index, is below that level, it actually tells you there's gobs of liquidity. And typically a market, unless it has just formed a top, is pretty much going to trade sideways to higher out there. So that's what, in essence, we're trading sideways as we speak right now. 1106 is the number to be watching. But where this says gobs of liquidity, yesterday was an interesting day, and it wasn't until I was just got back in the driver's seat and decided to go look for some divergent patterns, if there were any that were out there, and voila, I just have to find voila as we speak. I know you'd probably like me to find it like right away. Where the Sam heck did that go? Here we go. There we go. And we're going to take a look at one of the other tools that I like to take a look at to understand issues in the market, liquidity issues in the market. Because the simple thing is, volume or not, it doesn't matter. If there's liquidity in the market, prices are moving higher. Period. End of story. That's it. Sayonara. But it's really a great way to be able to look at it. And there's a couple of liquidity gauges. Well, there's several of them. One of them is certainly taking a look at that spot volatility index. Another is taking a look at what goes on inside of the high-yield bonds out here. And one of the ETFs I like to use, there's two of them, but one of them is the HIO. That's the Western Asset High Income Opportunity Fund. I just actually like saying that. Actually, it's a really cool tool, which is the bottom panel on my screen out here. And what you'll see now, interestingly enough, you probably didn't know this, but you know it now today, is when you see bottoms in the S&P 500, you actually see bottoms in the HIO. If you take a look at these kind of red, somewhat vertical lines, I tried to just simply expand, the line so that you can see, hey, here's the bottom inside the HIO. You extend it up and take a look at the bottom inside the S&P 500. Pretty cool. You probably didn't know that. But yeah, so knowing that now and knowing that directional type correlation that exists out here says to I, that we can go ahead and use this tool to identify divergences. And when this is moving higher, okay, when there's money coming in and chasing yields and bidding up the price of the HIO, same type of thing is happening inside of the S&P 500. Well, yesterday, actually, if I do this here, I had the chart set like this earlier. I just changed to a line chart because it's easier for you to be able to understand. But here's what I looked at yesterday. I looked at the candle from 2 days ago. It was, yesterday. And it was kind of like a gap down and took out some swing points out here. And that's what really caught my attention. That got my skirt in a tizzy out here, a tizzy enough to be able to say, hey, we should go take a look at that. And I'm going to go change that back into the line out here. And now it's not a timing tool. I've tried to find it as a timing tool, but I mean, we can use it a little bit. Let's actually go take a look at the old HIO, so to speak, out here, kind of like old MacDonald had a farm. HIO. And as we take a look at it, it's kind of populated on my other side of my screen. Just want to see if there's any pattern out here that we can make heads or tails of. And I can see the whole system as I pulled my system back up. So you're trading at, what, 509? Okay, so we're good here. So let's just pull this up on the screen. But you can see a divergence, right? You can see how this thing had topped out, maybe back around. You can use the date of, I turned the date off? How did I do that? That's weird. That must have been something when we came back up. It's sometime in April. How about that? Sometime in April, that's for sure. We'll try to. Well, here, I can tell you when the HIO topped out. It would have been this little shooting star out here on May 2nd. All right, so forget the April. It was really a May thing. Just do some wave counts out here. Try to figure out where we might be with anything. In this case, here, you can see the HIO is down below Stevie's red line, most certainly. It looks like it's headed to Stevie's red dash line out here in the 502 level. So you'll want to watch this. Hey, when the market bottoms, the S&P 500 as an example, guess what you would also see inside the HIO? Very likely. Yeah, you'd very likely see a bottom as well, or one that would be forthcoming. So watch that. It's a cool vehicle. But this says that there's liquidity is drying up. So it's really now it can be resolved, absolutely. But at this stage here, it says liquidity is drying up. If you were to ask me, are there any other divergent patterns out here that we would take a look at that exist right now? We can look at anything we want, but there's no divergent patterns between the equal weighted ETF and the actual weighted version, the QQQ. You and I, we use this as a divergence checker to help us identify when there's a problem. Guess what? No problems. We take a look at this. And all of these other tools that are out there, really no problems that stick out at me, at least. So okay, so where do we go from here? Good question. Oh, I know. Let's go take a look at gold and silver. And the question of the day, which is, what are they doing? Gold's up $4. Yeah, you probably thought gold was going to go ahead and turn around, did you not? Let me. Oh, hey, by the way, since I just happen to have this chart up on my screen out here, and this is for John in Sarasota, not a good scene to see this bounce inside of light sweet crude to right now drop down below Stevie's red line out here, which is at 42.93. That's a 30-minute chart out here. And it may just be pulling back, but it's not really a good scene out here. That red line of 42.93 should have held. Now, let's go take a look at gold on the same time frame. Let's just go ahead and get updated out here with regard to Goldilocks. And you'll see, a set of tools that just simply assist you in understanding what's going on intraday, daily, and so forth. And, you might have thought that when you woke up, or maybe you're up early and you said, hey, this is really great. Gold is starting to move, which it was. But, hey, when it got to 2 o'clock in the morning, and really when it got to 2:30, it made one of your favorite topping patterns confirmed when it formed that little bear sash, bearish engulfing style candle and dip below Stevie's red line out here. So it put in a short-term top. Now, it's possible that what we're going to see here on a short-term basis, and this is what to really watch for, it's possible we're going to see an A to B equals CD to the downside, creating what? Yes, exactly right. Creating some type of Gartley pattern. Now, we're already at the 1-to-1 level, the wide-ranging bar. That's 1249. I ask you, will 1249 be the stopping place for this pattern out here? And the answer is absolutely, positively, no. Why do I say that? Well, I say that because you have a wide-ranging bar, and you don't like to make a D point, and I'm looking at just a 30-minute chart. You do not like to make a D point with a wide-ranging bar. Nonetheless, it is a Gartley. It's just not a Gartley buy just yet. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So let's see here. What are we going to do? Where did we leave off? We were taking a look at gold. Hey, one other thing that doesn't look good for Goldilocks out here. Just simply does not look good. Let me try to pull this chart over here. Well, this would be a real bummer. My system is really acting up. I'm just hoping that we just, it's like it's on fumes out there. What the Sam heck happened there? Oh, my goodness gracious out here. Okay. Well, what I was going to show you, and I can't show you now, and I have no idea why, but it's going to be a real bummer. If I can't get to my other charts for you, I was going to show you the 2-hour chart for gold, which was falling down below Stevie's red line, and that price oscillator was just trying to peak above zero. So if, in fact, you see gold continue to sell, if I can't sell it here, then on the 2-hour chart, you've got so in the 30-minute chart, we had a wide range of bar coming into a D point. Not good. On the 2-hour chart, we've got potentially, now the 2-hour chart's not going to end until 2 o'clock, we potentially have the price oscillator, difference between the 19 to 39-day moving average, turning down below zero, which is never a good scene out there. So that's what's going on inside of gold. And now it's time to play, hey, what you doing out there? And we're going to go take a look at the Japanese yen, because we got to know what you doing out there in order to see what it confirms for us with regard to Goldilocks. And as we speak right now, at least these charts are doing just fine. That is so weird. Let me just go ahead and get rid of this little bottom panel out here. And what the heck? Oh, that was the average true range. We don't need that. And so if we take a look at it, here's the interesting thing about the yen. So it's basically done nothing the last 3 days. Well, sort of. You know, there is one Japanese candlestick. There's a couple of them. There's one that's a real Japanese candlestick set of candlesticks that create a momentum trade out here. It's called the rising three and the falling three. In this case here, it would be the rising three that could be formed out here. See how we have these small-bodied candles in a kind of a whitish bodied candle. That's a candle from the 19th, which took out that shooting star resistance from June 16th out here, which suggests to you and I that the yen wants to get up to 112.55. And if it does that, it's just not good for Goldilocks, because that correlation is still in play. Bonds, it's not there necessarily. They've got a mind of their own, so we have to take a look at bonds as a mind of their own and not worry too much about the Japanese yen. I mean, we still pay attention to it, but it would not be your primary decision maker behind what decision you might make on some type of short-term, intermediate-term trade out here. But if, in fact, we are to see, and this is the real setup, 3 small-bodied candles, and tomorrow would be the beginning of that day, of that rising three. And we're to see a close above, and I'm going to use the conservative approach on this, close above the high from June 19th, which is 111.60. Then there is your message that, in fact, there's your doble gi message out here, that, in fact, the yen wants to go try to tag that TAS market profile top of the box. Now, you can see the center here, the green line, a tad closer, more than a tad. 2 tads closer to the top of the box. So this is a real resistance zone, 112.55. It has been taken out before, but it should be a real resistance zone out here. So what is the yen doing? Hey, what you doing out there? Not a lot. It really isn't doing a lot. So other than the potential of that rising three pattern that we just talked about that exists. So you'll want to watch that, and then you'll know with regard to your confirmations what it is or it isn't doing. Steve, can you use the spot price rather than the synthetic? You can. We were talking about light sweet crude. I can out here, and so that's with regard to light sweet crude, and I'll put that on the screen for you. And you'll see, if you just notice this or you take a snapshot of this screen out here, you will see in many instances, not all, but many instances, you'll see the market profiles change levels out here. And more data is better than less data. And here is the current contract. And if we, and so at this stage here, 43.13 was on the 60-minute chart. If I go for the bottom of the box, just curious, sometimes they're the same, but or if I go back here, 43.13, what was the bottom of that 60-minute box? Was it 43.13? Okay, so you've got everything there. But here is the 60-minute for you, and this is for Danny in Atlanta. And you can just take a, because you're in the den, you can take a snapshot of this, I believe, out here. Again, even in looking at this, really the same message, market profile-wise. You just saw a little counter trend rally up to a resistance zone inside a hourly chart out here. 240's got a long way to go. 44.45 42 as with regard to its potential counter trend rally. 45.87 inside the daily and 47.50 inside of the weekly number out there. So with regard to those counter trend rallies, but there you'd go back and take a look at the other patterns, the A to B equals CD pattern, for example, and then understand where you could find resistance on that trade out there. So, Danny, I hope that assists you. And now that we're done playing Hey, What You Doing, let's continue playing Hey, What You Doing, and let's go play that in the let's go look at some of the individual equities out here without any other real questions that I see. Let's take a look at Tesaro, TSRO. Oh, I know one of the equities we'll want to take a look at here, Oracle. Team Oracle. Hey, they better get their act together. And you know I'm not referring to them as a company, but with regard to these World Cup races. The New Zealanders, they are just kicking, their butt. They've got the faster boat. They have the faster boat out there, those Kiwis out there. You like kiwi fruit? I like Kiwis out there. But I don't particularly care for them. I think we're down 3-0. I think the races resume Saturday, I'm guessing, Saturday and Sunday. We do probably 4 more races out there. They kind of keep that regatta going. So in any event, if we take a look at Tesaro, this is a daily chart out here. What is it doing? Looks like this is going to head up to the 157.98-ish type level. See if there's any volume behind today's move out here. Give me a moment here. We'll put on the volume. We're going to try to put it on. And, 826. Last time we were up here was with 4 million shares. So you got to anticipate that Tesaro should find resistance at 157.98. And let's go take a look at the Oracle, not the one of Omaha, but ORCL out here, having a nice day. Huge move. I mean, huge move behind it with volume. Breakout number dose out here. Let's see. Is there a three gap play? Yeah, there's enough gaps in here to suggest could be. Looks like it could be out here. But would you play it like that? No, I don't know. In fact, if you take a look at what Oracle is really doing, and this is a monthly chart, it has cleared time to head higher. It has cleared the 2,000 level. That's a big so now what we should see, and it's tried for a couple. This is a monthly chart, by the way. It has tried 2 other times to break through the high of what is it, 40, 47? Let me get the exact number out here. So that 46, 47, and you're above it now. Not with conviction. There was 953 million shares back then that were traded. This month so far, it's the 22nd, only 237. I don't care. Now what it's done. It may be tired because it's made the 1.272 expansion on a monthly basis of his last set of swing points out there at 50.40. We're trading at 50.42.
Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 25. S&P is up 5. I had to shut down my other charts, and they take a while to get back up. So we're going to be flying low without them at the moment. Back to Oracle, the Oracle of boat racing out here. Take a look at the nice candle. I don't know how the month is going to end, but certainly breaking above its old highs. Now that should become resistance. So 46.70-ish. What was it? 46.74, I think was the exact number. 46.47. A little dyslexic there, which is a good thing. It allows you to see things differently. Yeah, think about that for a moment, and I'm serious about that. Seeing things differently is really important, don't you think? I think I see things differently than many people in the markets out there. And at this stage here, it's proved to be pretty good. In any event, as long as Oracle continues to trade above 46.47, you've just got a huge breakout above resistance. That should become support. And Oracle is just set to go higher. How much higher? A lot higher. A lot higher, especially when you take a look at their valuation, which I haven't taken a look at their valuation. Well, I sort of have taken a look at their valuation. When you consider the amount of cash that they have overseas, do you know how much cash they have overseas? I didn't even look at this balance sheet here, but I know as of December what they had. In fact, I know what they had like to the shekel, but I just prefer to round it. And in rounding it, where are they? Come on, you talked about it. Now you got to find it. Where are they? $42.6 billion. Yeah, $42.6 billion. So they're going to stand farewell when the Repatriation Act gets passed. Will it get passed? Absolutely, positively, guarantee it, as much as I can guarantee it, but it'll get passed, and let alone the reduction in taxes, which is not even computed in here. So Oracle, much like it did back in the 1999-2000 level, it's about to have a replay of that as we speak. And you can forget about the volume metrics out here, totally different environment. And this thing, and you can say, I can't even give you an idea as to where this thing is going to head to. Because there's really not a consolidation. We can do all kinds of A to B equals CD patterns out here. It's just headed higher long term. It's just gapped up to an area that would be natural and normal for some people to get off the elevator out here, and it will continue to resume higher. It'll be higher come the end of the year than where it's priced at right now. Okay, so enough of Oracle. But I don't have those other charts out there in a kind of a strategic stall. I'm just kidding. We can continue looking at other individual stocks. I didn't see any email requests coming from anyone. So let's go take a look. Oh, Regenerate Pharmaceuticals. You already know what's going on here. So you sort of know what's going on with the IBB, although this is getting up to its projected level relatively quick. Let's put this on the daily chart. I think on the daily chart, there we go. How about that? So this thing is headed to the 556 level. Today so far, you got up to a price point. Let's go take a look at it. A price point of 543.55. So it's moving and it is grooving out here. Now that is the projected equal to or greater than consolidation. That's why we like to look at those consolidations, right? Is this not a beautiful pattern? It is easy. The easiest pattern for me to be able to teach someone who's never looked at a chart is to identify what looks like a consolidation area. I mean, they are simple, they are beautiful, and when you have lots of data that confirms it, such as we did here in Regenerate Pharmaceuticals, well, then it becomes easy to target where price is headed to, the minimum price objective. And you don't use it right exactly to the penny out there, but it's nice when you can. And that's the minimum. So it's making its way there. Now, if you believe that, if you believe your eyes, what your eyes are seeing here, because you know when it broke above this back in the early part of May, that's what we communicated, right? Just take a look at the daily chart out here. So if you believe your eyes, that's what you see right now, then what you should do is continue to believe your eye. Don't believe me. Do not believe me, but instead believe your eyes. And if you believe your eyes, which I think that you should out here, just give me a moment here. I'm just trying to clean this up out here. Then go take a look at the NDX 100. Now, the NDX 100 does have a consolidation pattern. Yeah, the consolidation, by the way, we can just move this thing right down here. There is your consolidation that went on. It broke through that consolidation. There's a couple different levels we can use out here. I'll give you the conservative one. Conservative one takes us to about 81.20 or so. The aggressive one is Stevie's 8,500. So if you believe in consolidation patterns, and if you believe that what we just looked at in Regenerate Pharmaceuticals is what is unfolding, then why would you even doubt yourself that the NDX 100 is headed to 8,500? I don't care what anyone says. Until proven otherwise, until price comes back into the consolidation below the 2,000 high, price is headed to 8,500. It is, technical analysis is that simple, at least with regard to the ability to be able to project what's going on. Now, the day-to-day stuff gets a little bit more complicated, right? You've got to take a look. That was a longer-term view. You've got to go take a look at, hey, what's going on, what's going on intraday and things of that sort, just to try to understand and catch those swings. But isn't it nice to know longer-term where price is headed to? It's a beautiful thing. I don't know why those charts haven't even started coming up out there. So I may have to just, oh, there we go. Now we got something that's going to start. Now, why is it in the middle of my screen? Why is it in the middle? There we go. Okay. Now let's go take a look at some other stocks. Hey, let's take a look at that Tesla out here, TSLA. It's got its own consolidation pattern. Here's the monthly chart, right? You and I, we took a look at that. Everything happens for you in life. We just pulled this up on our screen. I didn't realize that we had done this, but there's a consolidation pattern inside of Tesla. And so you came up with a price projection because you know how to identify those consolidations. And you said price is going to head to about the 400 level, 395, and you're 383.92 as we speak right now. And greater than or equal to is the price projection for those consolidation patterns out there. So you know what's going on inside of Tesla. AutoZone, let's keep this on the monthly chart out here. This does not look too good out here, but it is pulling back into a base out here, which was right around the base. This thing based out in the February 2014 to October 2014. So it's just coming back into that area. If it gets below that, its next base is around 392. So the base area about 508 to 550. You're at 581 as we speak right now, and that is AutoZone out there. What else do we have going on? And that's up today, but because we're on the monthly chart out here. The IBB, if we take a look at the IBB, we leave this on a monthly basis as well. You identified this a couple of days ago. You said, wow, look at the consolidation pattern inside of the IBB. Where is it headed to? and you came up with the price of 356. You see how easy these consolidation patterns, when they form, are easy to spot? Easy peasy out here. That's where it's headed to. So you're seeing it with your own eyes. Do they ever fail? Of course. Of course they fail. They can fail. Price has to get back inside the consolidation pattern, but they work more often than not and on all time frames. So 1, 2, 3, where is the NDX 100 headed to? Exactly, 8,500. It is a beautiful thing. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Yeah, it looks like I got to reboot just about everything. But hey, we survived. We made it this far. Even if the whole thing craps out right now, you'll just have 4 minutes of uninterrupted music out there. I don't know. Maybe they'll just play Stevie Ray Vaughan, but I don't think we're going to lose it. I think we're good. We looked at some stocks that were moving to the upside. Let's look at stocks that were moving to the downside. Let's take a look at Accenture out here. ACN is the ticker symbol out here. ACN, ooh, gapping down. Big volume behind it, finding support right now at its TAS weekly profile. That's at 120.04. So it has found support there with volume, but we know where the buyers, right? Just simply by having these market profiles, what you and I know, great Dave Mason tune out there, only you know and I know. We know where there's areas of support. Let me turn off the daily out here. It has this one right there. There we go. And when you take a look at this, right, what you've learned, what you've identified is, yeah, but we just, no, we don't disagree, Polar. If we do take a look at 120.97, that's the center of the box. The bottom's 120.04. When you see those smooshed together, that's a technical term out there, so close together versus where the top of the box is, you know that what the buyers are telling you is they are lined up. That's where the sniper buyers are lined up looking to be able to buy. And that's why we have seen price hold there. Doesn't mean they can't get rolled over. Okay, because most certainly they can. But now you really know how these profiles work. And when you do roll over, where would price go? Well, in this case here, you start looking at swing points. So 114 is a swing point area. The 112 is an area. And you'd probably say if it were to fail, where it probably heads to is this big breakout that takes you into about the 108.79 area, and that is on Accenture. But so far, it has found support where you specifically anticipated that it would find support on its move lower, even with volume out there. Let's take a look at Coherent, see if there's anything coherent about this stock. Down $5, that's 2%. We're looking at the daily chart out here, and yeah, no big deal, no big volume. This thing had a breakout. Back on May 10th, they invited 1.2 million people to that party out here, and of course, price pulled back around recently, June 15th, and it found support where? The bottom of its weekly profile here. So no big deal inside of Coherent, COHR. Let's go take a look at Ulta Beauty Salon. Let's go buy some shampoo. Actually, let's not. Let's wait because it's still on sale out here. So this thing moving below where? That's right, moving below Stevie's green line. And they're really not mine, but John Logan's green line, the TAS market profile weekly level. And if it closes below 287.94, that's a problem. Now, that problem here could easily be resolved by just simply coming back into this breakout area, since it's right now below the high of that breakout back on March 10th. It's a daily chart we're looking at. It says 270.50 is game out there, and there's another high volume bar. So where Ulta Beauty Salon is pulling back to, if you were looking to get into it for whatever reason, you want to watch 270.50, 273.99. You want to see, and I do mean you want to see volume lighten up, and you want to see some type of bullish reversal signal out there. So that is ticker symbol ULTA. And to finish it off, let's go take a look at, I don't know, what do we want to take a look at out here? Well, let's take a look at Russ, for Russ inside the Tigers Den. We never look at that. This is the daily Russia bear. 3 times out here, moved a bit lower. You really, I don't know how you would trade this. You got to go take a look at what the instruments are, what the indice is, what's going on currency-wise out here. That's why you see a bunch of these gaps and so forth. But Russia, I wanted to pull it up for you just to go ahead and squeeze out the last few seconds of time. So, folks, thanks so much for being here. Stay tuned. David White is up next. He's going to tell you for sure. He's going to confirm for you. I know. I can just feel it. He's got 8,500 in the NDX 100 written all over his set of papers and documents. Steve Rhodes, TFNN. Have a great day, folks. We'll see you on Fantastic Friday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.